Hello, Big Trends traders. This is Price Headley with your Grand Slam Options product review. I want to talk about this Grand Slam Options program because it's my most aggressive options trading program currently, but definitely takes advantage of the leverage that option purchasing can give you. Want to talk quickly about the risk that's involved with options too, though. Everything we're talking about here is for your information and education only. Nothing I'm talking about here should be considered a specific recommendation of buy or sell any particular investment. Of course, you know that you are 100% responsible for your own investment decisions. Big Trends and the staff are not responsible for any trades you choose to make. And not all Big Trends products and services are appropriate for all types of traders and investors. This is our most aggressive strategy at Big Trends, so not for more conservative traders who can't handle the risk. Big Trends doesn't provide any personalized financial, tax, or legal advice to any individual. We send out our Grand Slam Options alerts to real-time email and text alert to your smartphone. Then you decide how you want to use it. Do consult your tax advisor before you make any investment that might impact your unique tax situation. So the whole opportunity here is that we're able to buy options that are very cheaply priced. At $1 or less is the way they're quoted per contract, which means that every contract controlling 100 shares, you multiply times 100. So $1 would be $100 to control a stock that's worth usually many thousands. So that's where the leverage really kicks in when we catch typically fairly quick and sharp moves to take advantage of the leverage of these cheaply priced contracts. We'll talk quickly about why gamma matters in options, particularly a lot for this approach in our Grand Slam Options technical indicator filters. Today with a focus on my big trends bands supported by the Commodity Channel Index CCI and the Average Directional Movement ADX with a quick overall review of my Grand Slam aggressive options trading strategy. Of course, when I think about hitting home runs, I think about Babe Ruth. You know, he had 714 career home runs. The interesting thing is that he had almost twice as many strikeouts, 1,330 career strikeouts, and yet he still won 6 world championships on teams that he played on at some point during the year. And basically he said, never let the fear of striking out get in your way. See, you can lose what you put into one of these trades. You can lose what you put into multiple trades, but the reality is that you keep coming back swinging as the Babe did. And with the edge that we've had a lot of success showing people how to get in and more importantly, how to get out when it's not right. We want to, obviously, if we're not right, we want to minimize our risk. We'll talk about how we do that. Now, we talk about the big trends bands. This is an indicator I developed inspired by Larry Williams. Larry's a friend of mine. I've had a number of conversations with him, and he developed a lot of indicators, including the percent range or percent R indicator. The key here is that the word overbought is often misused. A lot of people hear the word overbought and you think, oh, it's gone too far. It's got to come back down. What overbought shows you on the traditional Williams percent R framework over here in the red bottom panel, bottom left there, is that when something goes overbought, you think, okay, well, it's gone too far. It's come up recently. It's got to come back down. You can see just how wrong that would be. And what I look for is it starts to break out through that overbought threshold. In this case, the light blue line is my upper big trends band. The more jagged white line below that is my lower big trends band. When it's breaking above that upside band, that's setting up a potentially big continuation move where overbought can stay overbought, and that's the top 20% of those percent range readings can actually give you where your really big trends are. And it's the old Pareto's principle, top 20% of your trades are probably going to drop 80% of your profits, typically in an aggressive options trading strategy. So you want to make sure you're not looking at the markets in a flawed way. I talked to so many big trends coaching students and fellow traders who have been taught the wrong way, and we have helped retrain thousands to taking advantage of these big trends when you see them. Same way on the downside, oversold markets can actually lead to even more oversold markets because the institutions start dumping when something's breaking down. And we talk about the kind of stocks that can make these kind of big moves up and down. And you see there's quite a bit of tech in there like Alibaba, Baidu, Broadcom, Microsoft's been very good to us. I'll show you a Microsoft example here in a little bit. And then, some of the financials like Goldman Sachs, some of the credit card companies like MasterCard and Visa, of course, Tesla as a new age auto company, casino stocks, Wynn Resorts and Las Vegas Sands, as well as our favorite gold stock, Rand Gold, GOLD, and our favorite oil stock today, Schlumberger. I'll show you a Schlumberger SLB chart on the oil services sector, and of course Nvidia, another popular tech name. So, but those are just a few. We look at 40 plus key names. Also, what we do that's different than most is we look at option charts, not just stock charts. So you say, why would you bother to look at an options price chart? Well, there's a couple of reasons why, because you have options are priced differently than stocks. You know that stocks have no time erosion risk. A stock like Apple could last for many, many decades past your and my lifetime. But the bottom line is that if you buy a 1 month Apple call, it's got 30 days to go until expiration. You've got that 30 days to make something happen in Apple. If it doesn't happen, you're out of luck. And so we don't want to be in that position. We want to make sure that the stock does not stay flat, but that gets moving dramatically, or else we'd be risking an option expiring, which can happen, where it just doesn't move. We don't have much to salvage, and we go ahead and say, fine, we give it a chance to ride, and every once in a while you'll get one of those that craps out on you. That can happen and probably will happen, so it's good to plan for it and don't overcommit your capital. I'll talk more about capital allocation later, but the worst you can lose is what you put into a trade when you buy these options. You can make many multiples of that, as I'll show you examples here in a minute. Also, volatility, of course, when something's priced, especially in front of earnings, they'll get juiced up for its volatility in the option premiums. You got to be careful about overpaying for that kind of volatility. We're looking for more of the trend-based move, not so much of the big earnings gap move where you have to overpay for it and then oftentimes don't even get it. So speaking of earnings, let's talk about an example where we took advantage of earnings, but after we'd already taken our risk capital off the table. This is a case of Microsoft back in mid-October, and we were buying the Microsoft in mid-October. The November, which was the mid-November expiration, about a month away, the November 80 strike calls, and the stock was trading in here around 76.5. And so we're buying it here because our percent R is showing us that we're getting that breakout. Our CCI confirms that. And then our ADX came on a couple days later, and it too confirmed that as everything's kind of clearing those overhead resistances. You can see before when we were trying to get through that resistance the prior time, notice it kind of kept getting stuck. And so that would be an X, no thank you. We want to see examples where the stock continues to perform and move on through that resistance to tell you that then the institutions especially are going to drive into that stock, whether it's based on earnings, whether it's based on some other factors. Microsoft's been big in the cloud, which has been a big part of their growth here in recent years. So bottom line is that, cloud services driving Microsoft, and it really rose to the clouds as we basically took a double and half our position. That's our first key profit-taking rule, is if we can get a double and half our position, we take that off the table. Why? Because when you get a double and half your position, if you started with $1,000, which is what our model portfolio usually starts with, is no more than $1,000 per trade, and now that's worth $2,000, you sell half your contracts, you get your original $1,000 of risk capital back in your pocket. Now you really have a free trade. Now you have a lot of flexibility to keep rolling. And in this case, you see it kind of flattened out after we got out of that first piece at a double in that first square, first white square there. And we said, look, earnings are coming up. We'd like the chart still. Everything still looks good. We're going to take our chances in the earnings that we could get a gap in our favor. Sometimes it gaps in our favor. Sometimes it gaps the other way, or sometimes not much happens. But the bottom line is we've gotten a guaranteed break even if the other half went to nothing, because we took out the plus 100 on the first half. In this case, you see it finished around 79, then it opened here at 84.30, and we sold those options initially that we bought for $55 a contract for $471 a contract. That was a 756% gain in gross profit. These examples before commissions, so factor your commissions accordingly. But you can see on half of our remaining position, usually our targets are plus 200 on another part of our position, and then plus 300 on the final piece. But in this case, if it gaps more than that, we'll take the windfall any day of the week. So in 11 trading days in that case for Microsoft. And then you see the ADX in green is headed up. That green line, you want to see that rising right there. You don't want to see that going down. You want to see that yellow CCI staying in the overbought, as well as a percent R staying up there in that overbought territory. This is very confounding to the average Joe or average Jane that basically has read that overbought's bad. If we look at the option chart in comparison, you can see that what's interesting is that we were getting the stock signal here right as the option was just starting to kind of perk up a little bit above that big trends band. You can see that the data really kicked in to perk up as we went overbought and then actually cleared through that resistance right about the time we were taking our double on half, and then it went through what we call a retest, and it just kind of held right there right before the earnings gap up. So you can see we couldn't get our next target after our double was a triple, a 200% gain at $1.65, couldn't get filled. It was only trading up to about $1.50 here before the earnings. But then you see there's the open at 4.71 from the entry at 0.55, and that's where that big leverage came in. So you average those two halves, you come up with a 428% gross profit. So from this perspective, so the big edges. Now talking quickly about gamma. Gamma is where we're getting the maximum kind of pickup in how fast that option is going to move against the stock, what's called the options delta. And all that means is that if I tell you an option has a delta of 50% on a 1 point move in the stock, then you're going to, stock goes up 1 point, you make 50% of that in your option, and the leverage, since you're buying only a few percent of the cost of the stock in the option, is tremendous. Well, then that gamma effect will help you pick up even more deltas, even more bang for your buck on the next point move after that. So we use this gamma approach to say, let's find the very high gamma, very sensitive options that are going to pick up value. And those are usually options about a month out to have about a slight bit out of the money from where we are right now. We use the option charts as well, with 40 plus stocks that are tailor-made to this strategy that show a historical bias to working well. Not every trade is going to work. Some trades are going to be losers, but the bottom line is that if you contact us at bigtrends.com, we can get you our full track record and update you. One more example, as we kicked off 2018, we've been watching Schlumberger, the oil services leader, SLB as a symbol, for a long time. And you can see it had all this overhead resistance in here. And we actually had our setup point happening right off of this high for the percent R, and just a little bit later, a couple of bars later for the CCI, and all across that resistance right there, we needed to see it close through that, above that resistance. That close happened, you can see, the first trading day of that new year, and so we were buying in here that next morning on the 72.5 calls at $1. Now we got 100% just the next day, 200% a couple days after that, and we ended up getting the 300%. It's not hoping. We did get the 300% in 5 days. Okay, so plus 300 on the 5th day, and it actually went even a little further than that. I don't care if it goes further than that. I'm happy to book double and half, 200% on a remaining quarter of the original position, and then 300% on the final quarter of the position. That leads to a lot of happy subscribers. So some of the keys to being a Grand Slam options trader are, that you want to make sure that you've got a catalyst, whether it's earnings driven. We're going to tend to, if it has good earnings, a good rally after earnings, that's probably going to be leading to a pretty nice looking upside chart. We can benefit even after an earnings gap if it continues to break out. We want to see those technical confirmations and seeing that the stock is indeed holding those gains via the big trends bands, the CCI and the ADX. We will always buy options at $1 or less. So they're going to be out of the money when we do this, going out about a month. And with that high gamma is where you can really hit the home runs or the grand slams, which would be where all the bases are loaded and you get truly the clearing of the bases and the big boost in your portfolio. Now, the basic stop principle is I don't put a price stop in the first 5 trading days. What I say is that let's give it a chance in the first 5 trading days. If the stock is flat or against us at the 5th trading day that it's closed, that we're in the position, we say, cut it loose, it's not working, get out. We'll take that loss at that point, even with the option having potentially several weeks to go before expiration. So if it's not working, you get out. But as you get those targets, you take them off gradually as the market makes money available to you. If we get a big gap in our favor, then of course we're going to say, thank you very much, we'll take advantage of it. Here's the key to not getting greedy. Keep your capital allocation consistent. Our results, we don't compound our results. We just show you that, look, if you use up to $1,000 a trade, in 2017, you could have been looking at potentially tripling your portfolio on this particular strategy. Off to a great start in 2018 and expecting great things ahead. But we still don't want to load up. We still want to say whatever capital that you would commit to the service. This is definitely should be risk capital where you can afford to take losses and stay with the system, because you're going to have times where you have drawdowns, you give back some, or if you get started and have a loss or two, that can happen too. Don't want you trying to load up on any one trade. Just take a nice, steady, slow but steady approach, especially getting started. And then you get weekly video training from me where I'll teach you all about this. So to get more information about Grand Slam options, just give us a call at our 800 Big Trends number on the bottom left. That's 800-244-8736. Or you can drop us an email over at clientcare@bigtrends.com and find out more about the Grand Slam options program. I hope you enjoy this product overview. Let us know if you have any questions, and keep trading well.